The climate decision raises questions about the U.S. economy, and so does today's jobs report. In it, the unemployment rate dropped to its lowest point in 16 years, causing some economists to raise the prospect of what they call full employment. But job growth seems to have slowed considerably. With the latest revisions, the economy is generating an average, we are told, of about 120,000 net new jobs each month. To get some insight into all of this, we're joined from Chicago by Diane Swonk, an economist who runs her own firm. Diane Swonk, welcome back to the program. So overall, what do you make of these jobs numbers for the month of May?
Well, certainly they were a disappointment. That said, we don't need to generate as many jobs as we once did to keep the unemployment rate steady or even fall. Of course, the unemployment rate itself fell for the wrong reasons in the month of May, and that is that the participation rate fell yet again. We're seeing more people retire out of the labor force, and men in particular did not participate as much in the month of May. That's something we like to see moving in reverse at this stage of the game.
When you say, Diane, that the country, you said we don't need to generate as many jobs as we once did. What do you mean?
Well, basically, the labor force isn't growing very rapidly anymore. And even though the economy is very subdued in its growth at 2%, you just don't need to generate very many jobs to absorb those workers coming into the labor force and keep the unemployment rate going down. We've actually seen job growth slow and the unemployment rate fall. And that's because we're near what we call full employment. That sounds good in terms. What it really means in economist terms and for the Federal Reserve is nearly all of those people who are employable or are employed or who are looking for a job now are sort of either between jobs because they wanted to be between jobs or just coming into the labor force, but it's not a lot of extra slack in the U.S. economy. That said, it doesn't mean all those people who want a job in the U.S. economy and have dropped out and not looking can actually get a job.
Diane, you were telling us earlier today that the focus on jobs obscures the need to look at raising skill levels. Talk about that.
Exactly. There's two reasons why we saw the wage gains slow in the month of May from a year ago. It's only up at a 2.5% rate. This is something we'd like to see going the other direction. If you're near full employment, wages should be accelerating. One reason is because millennials are replacing older baby boomers and they're paid less. That's not a bad reason for wage growth slowing. The other reason is that we're seeing many employers out there dip further into lower skilled workers, but instead of paying them more, they're actually investing in training because they don't have the skills necessary to do the jobs they have, or they're leaving job positions open. The shortages in construction are particularly acute in manufacturing, which actually contracted. We still have over 300,000 jobs that aren't filled just because people don't have the right skills. So we would do much better to enhance the skills of those out there who are on the sidelines and not participating right now to bring them back in than just give them tax cuts to cut low wages.
And very quickly, finally, Diane, we took note yesterday when President Trump talked about the country having created, I think he said, 1 million jobs since the election last November. Does that reflect what's been going on?
It's a bit of a stretch. We have created 800,000 jobs since the beginning of the year. If you want to do it since he's been president, it's about 600,000 jobs. So depending on how he wants to count it, I think it's a little early for him to take credit one way or the other, and he might be careful on what he wants to take credit for in terms of job gains. I think it's going to get better going forward, but the bottom line is that's not really the way to count it.
Diane Swonk joining us from Chicago. Thanks very much.
Thank you.